Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Andy Swan, the co-founder of LikeFolio. Thanks for being here again, Andy.
Yeah, I love it.
All right, so we're talking Netflix. Shares are down over 65% so far this year. And Andy, the last two earnings reports, stock fell 21% and 35%. After hitting nearly $701 last November. The competition in this space, the company came out and said, hey, we're going to lose 2 million subscribers next quarter. That's, gotten everybody kind of frightened at this point. But what kind of data are you seeing out of LikeFolio to either say, hey, maybe it's gone down too far too fast, or maybe it deserves to be down here as far as the share price goes?
Yeah, every once in a while, I come on this show, I feel like I'm stepping in front of a runaway train, and this might be one of those, because I do have a little bit of a bullish outlook for Netflix, mostly because the stock and Wall Street expectations are so low. There's definitely problems at Netflix. I don't think Netflix will ever be the dominant force that it once was. The competition they're facing is very competent, very pervasive. And, when we look at just mentions of people talking about viewing streaming content online or on their devices, we've really seen that drop just in a year from 66% of streaming viewership mentions to now under half of mentions. And that's a really big move, for someone that had such a monopoly on this space for such a long time. And then when we, move into cancellations, which was a huge factor in last quarter's big earnings miss, they just had a lot of churn, and investors just aren't used to seeing that. We do see elevated levels of cancellations continue. There's a cancellation mentions. Some of that's a reaction to the news itself. Some of it's a self-fulfilling prophecy where people see, wow, a lot of people are canceling Netflix. Maybe I should cancel Netflix. So there's a lot of that there, but the one thing I will say is we're seeing that really start to taper off, that cancellation trend really start to taper off, which I think could lead to the company printing, a not so great number on subscribers, but having some optimism that the worst is behind them. And I think that's the type of thing that Wall Street wants to hear. The bar is extremely low for this stock. It's down, like you said, from nearly $700 late last year to under $200 today. And so we think this is overdone. We think we could see a relief rally on earnings, basically because Stranger Things did a really good job of driving demand for Netflix services, probably blunted that churn problem that they have. And we think that the numbers may not be so great, but we think that at least the executive team can finally get onto one of these calls with a little bit of optimism and confidence going into the second half of the year.
Andy, when I look at your data, and you're right, that move from 66% to 47% is a big move. But yeah, my first question is about your data is, how big is did the pie get bigger? Is 47% that of a bigger pie?
Yeah, that's a great point.
I think that's an important,
yeah. It absolutely, that's a very good point. It is a bigger pie. The macro tailwind of cutting the cord and streaming viewership on the rise it absolutely continues. So the pie has gotten bigger. Netflix's slice of that pie is getting smaller, but there will be a lot of winners in this space that come from the outside. It's just that we're really just saying Netflix just can't be as dominant as it was, for the past decade.
Yeah, and Andy, if you look at this, it's all based on, Stranger Things, and people were keeping their subscriptions to get that because Stranger Things didn't come out until after the quarter was closed by the company. So when you look at this, it's all about the hits at this point, right? Do you see your data just following what's coming out, whether it was Squid Games before, Stranger Things before that? It's got to be about the content at this point right now. Is that what your data tracks? Yeah,
absolutely. It's all about the hits. It's all about, how can they keep that consumer engaged, because one of the problems Netflix has, one of the great things about Netflix is how easy it is to sign up for it, how easy it is to get into their ecosystem, but it's really almost just as easy to leave. And so from a month-to-month basis, if they're not producing new content or some sort of hit, even if it's from the past like they had with The Office or Seinfeld, there's an easy way out, and you don't feel like you're being locked out. So I do think that this ad-supported model that they're trying to develop, that they're partnering with Microsoft on, I think that there will be good reason for optimism around that, so that users don't just go from whatever it is they're paying per month now to zero. They can go from premium levels to still contributing revenue through an ad-supported model during some of their downtimes or pause periods. So I'm pretty bullish on that for Netflix as a stopgap between, just you're either a full subscriber or you've quit. I think there is a good middle ground for people to land in, and Netflix partnering with Microsoft, I think they'll do a good job of that down the road.
Yeah, that, and they have to work on the password sharing aspect of it to kind of get, they said estimates are about 100 million people password share. I couldn't believe those astronomical numbers. But when you look at, your data is starting to flatten out as far as cancellations go, or decrease a little bit, which is a positive at this point. Mentions are starting to go up here. Do you have an earnings score going into this report?
Yeah, we're pretty bullish on Netflix. And again, I understand what I'm stepping in front of right here
right.
Because the last couple of times it's been a complete disaster. I think, market expects about a 10% move in the stock, if I'm not mistaken. So I'll let you guys figure out how we trade that from here. But I do think that the market is ready for some good news from Netflix. They're ready for a reason to buy back into this stock.
Yeah, and you mentioned, the CEO, Reed Hastings, he usually or typically during those conference calls is really good, right? Or at least he was up until the beginning of this year when they got slammed on the last couple of quarterly reports. So they definitely need him to turn back into the good guy on those conference calls for sure. All right, Andy, great stuff as always. Have a great day.
Thanks, you too.
All right, that's Andy Swan, the co-founder of LikeFolio, breaking down the data for us on Netflix.